terms of the structure at this stage.
Okay, Mihir, were some of these concerns allayed by Mr. Bhargava? I'm just trying to play devil's advocate to what Amit said. He said that in any case the marketing margins are intact. The manufacturing cost is usually 1/3 of the entire cost of putting the car finally on the road or selling it, and that he saves because his own cash is intact and he earns an interest on that. Does that satisfy you?
I think to large extent they have tried to address quite some issues. Also the second point where the panelists said that will they shut down the Gujarat plant if the product is not viable? Well, he categorically said that utilization levels will actually depend on which is the product which is successful and what kind of demand is there for each of the products manufactured at various locations. So that actually to some extent clears the doubt that which plant will be taking the brunt. It will all depend on how the demand is for which product and where it is being manufactured. So so I think some of the answers would obviously, as and when after 4 years when the plant comes in, things could drop up, but to large extent they had tried to, in the call also they had tried to solve a lot of issues which even the analyst and the investor community had.
Okay, I just have one one grey area that I did not get a clarification from the management from Mihir. What happens in the export process? I mean, if Suzuki decides to export a large part of the products from this plant, will Maruti have no role at all in this? I mean, will it be manufactured, branded and sold by Suzuki itself and Maruti will not be able to benefit from it?
No, all branding will be for MSIL. They are clearly said. Even the exports will continue same as what Maruti will decide on. So there is no question. I think no question on branding and Suzuki basis. I think that was being said on the call as well.
Okay. Mr. Gupta, I just wanted you to come in on the point that Amit was making about transparency and clarity, because we know that the fundamentals of good governance practices include not just regulatory compliance but transparency and clarity also. On those two parameters, do you think Maruti could be faulted?
I would say very simply that governance starts when the law stops. It is beyond law. What Amit said, there are two things. As far as the lease rent is concerned, there is not an issue. It is a mere book entry because 100% production is being bought by Maruti. So whether it is 1 rupee or billion rupee, it is going to be the
price
same
to them.
But the problem would be that what is the capacity utilization of the plant. Now, if you have set up a plant for 1 million car and you only manufacture 1 lakh car, then entire cost is loaded on 1 lakh car. And Maruti would be buying the cars at a cost. So at that case, it will hurt the margins of the Maruti. So as long as there is a proper capacity utilization which is more or less equal to what is the current capacity utilization of Maruti, it is a win-win situation for the minority shareholder also. Transparency, I do agree. When you have a subsidiary which is unlisted subsidiary, there is no mechanism by which you can get the data. That is where the shareholders who will be voting on this have to ensure that the agreement provides for some minimum transparency which is applicable to the listed company.
Is that possible in the law?
It's law. I will say governance is beyond the law.
Okay.
When the shareholders vote for this proposal, when they say that the agreement should say that the entire balance sheet and entire profit and loss will be made in accordance with the regulation which are applicable to the listed company, probably that could be handled. The only, and as far as your question that export, it is very clear that this subsidiary will not do any sales to anyone except Maruti Suzuki. So everything will have to be routed. So if you look into, the question was asked that why Suzuki is doing. The answer lies in very simple fact that capital finds its most efficient allocation. Today in Japan, the interest rates are 0%. If you see Maruti's net profit margin is 5%, they get 1% royalty, 2% royalty on the sale. Maruti's asset turnover ratio is close to 4, but because it is a depreciated plant, but this plant will be new, so at least 2 times the asset will be there. So my back of the envelope calculation is this: even after giving up 43% or 44% of profit to the minority shareholder, Suzuki will still be having a pre-tax return of 8%, which is a number of times 0% interest. That's right. So it is because of the an interest that Suzuki is not earning in the cash there. And as far as the
Yeah, but they could give a low interest loan to Maruti.
no, but then they can give low interest loan to the Maruti. Then you have to go through all this. Then the shareholders will ask why you are taking the loan.
Okay.
So
Okay. Because they have money.
it's a very simple. It's whatever way. As long as it is done in a transparent manner, I don't see any issue. The shareholder have to be very cautious, which we will be advising to the shareholders that what are the areas where you go to look into.
Okay, I just have one final question that I want to ask a couple of you. but I don't
Let me
have
just
time,
intervene
so-
on that.
Yes.
Sure, Amit, go ahead.
Sorry, let me just come in on what Mr. Gupta had said. At the end of the day, Maruti Suzuki needs to decide what is best for its shareholders and not what is in the interest of Suzuki's shareholders.
I agree.
That's true.
Let me just stop there with that intervention.
I totally agree.
Okay, I have one final question. Since you did point out that, we are only interested in what Maruti shareholders will get at the end of the day, but you made a point in your report where you said that Suzuki, the fear is that Suzuki will eventually have complete decision-making power on how production will be distributed between the two plants. So, say if the volumes eventually, at some point in time, fall, then Maruti may have to slow down its own production and not the subsidiary. That was one of your concerns. Mihir, would this concern you as well, that eventually Suzuki will take calls that may be not in favor of the Maruti plant?
Yeah, I mean there are ifs and buts, but I'm just saying what the management has said. That management clearly said that production and utilization will all depend on the success of models which are being produced in each of the locations. So, like for example, if the Swift and Swift Desire is reduced in Gujarat and incrementally rather than in Gurgaon or Manesar, and they are doing well, and an XA Alpha is not doing well, then probably that plant will have to bear the brunt of having low production. So it's a tough call right now to say that Suzuki will eventually decide which production what production will shut down, what will not shut down. But as far as management is concerned, they've cleared it.
I will add one small point. It is regardless how the production is distributed, because if the cost is totally to be transferred to Maruti Suzuki, so whether it is one vehicle or billion vehicle, it is the same cost. A car could be $1 billion or $1 depending upon the volume. So it is going to be immaterial how the production is distributed as long as they are absorbing all the cost.
Yes. Well, actually, we have to take a call on how Maruti and Suzuki will behave 4 years down the line.
Yeah.
And considering that this is not as transparent a structure, there are question marks on how they will behave 4 years down the line. So it is really beyond law and beyond audit. It is a question of governance and faith. So that's where we have to end this discussion. Mihir, Amit and Mr. Gupta, thank you very much for joining us in this discussion.